Hello again. Welcome back. Thank you for tuning in this week and thank you for watching. So the CPI numbers just came out today, so I'm going to talk about those real quickly. We have a 2.8% inflation tax in February. I don't think it's going to affect Tiff Macklem's decision next month, early in April, actually. He's just going to do the same thing, hold steady. He needs to see more pain in the economy before he makes any downward decisions on the rates. So don't keep your hopes up for falling rates anytime soon. 6.5% of that inflation tax was towards shelter, which was the biggest part of inflation still. So, of course, that's the biggest thing contributing to it right now. And of course, if TIF cuts rates too early, of course, things will go up, but it's not going to happen. So, yeah, don't keep your hopes up. Now, big news that came out of the States, like industry changing news here, and this was big. So I'm just going to go over this quickly. This was from the National Association of Realtors. We're very closely linked to the US when it comes to our organized real estate and our model. We share certain trademarks like Realtor and the MLS even. Our systems are very similar. We use the same software providers to run our systems. So we are very closely linked and our models are very similar. But anyway, let's look at this new press release that just came out on Friday. So the National Association of Realtors reaches agreement to resolve nationwide claims brought by home sellers. So this was March 15th, this press release. The National Association of Realtors today announced an agreement that would end litigation of claims brought on behalf of home sellers related to brokerage commissions. So yeah, this is big. This could change the way real estate works or organized real estate works, and it will change actually in the States. This is a huge change, and I'm going to explain it now, but let me just read one more paragraph from this. In addition to the financial payment, which was about 418 million, I believe, in compensation to sellers, NAR has agreed to put in place a new MLS rule prohibiting offers of broker compensation on the MLS. This would mean that offers of broker compensation could not be communicated via the MLS, but they would continue to be an option consumers can pursue off MLS through negotiation and consultation with real estate professionals. So in the States, just like in Canada, when you list your house, the selling agent or the listing agent, they set a commission. And in the States, it's a lot higher than Canada. They're like 5-6% by the sounds of it most of the time. And usually half of that, or approximately half, would be offered to a buyer broker. So when they show a bunch of buyers your houses, they know how much they're going to get paid, and the seller technically pays the buyer brokerage. Same thing happens in Canada. So they're ending that being allowed to be posted on MLS because it gets posted on our internal MLS so that we see, oh, I'm getting paid this much. Of course, we're going to show the house and whatnot. We're not supposed to not show the house if they're not paying. But of course, it's something that we always look at to see, okay, how much are we getting paid or am I getting paid? So this was big enough news that the Canadian Real Estate Association put out a press release because we also have a legal dispute in Canada that started just in February, actually. It was commenced prior to that, and the judge gave it the go ahead in September 2023. But of course, the lawsuit was formally filed, and there's a couple lawsuits in February this year. But this is what CREA had to say the same day. They're very concerned about this, obviously. The Canadian Real Estate Association is closely monitoring today's announcement from the National Association of Realtors that it has agreed to settle its class action by paying $418 million and eliminating its rules on commissions that were subject to the actions. There are different legal and factual circumstances between Canada's litigation and the matter in the United States. Canada's ongoing litigation is still before the courts, and we will be reviewing their agreement. So kind of like, yeah, they have their own problems. Ours is different, but it's not. It's very similar. And they're going after all real estate boards in Canada through two different claims and all the major franchises and a few major brokerages. So it's like a very widespread class action lawsuit in Canada that's been undertaken by these sellers, and there's two of them again. You can look them up, but there's two separate ones. And anyway, this is some Canadian news on it now. This is from the Real Estate Magazine, and all of these links are in the description, so you can go and read them yourself. CREA and industry face class action lawsuit. Allegations of anti-competitive practices echo Sunderland claim. And the Sunderland claim is the one of the two in Canada. This is a newer one with somebody else that has started their own. The communication states both claims allege that rules requiring home sellers to offer a cooperating commission to prospective buyer brokerages when listing a property on MLS are anti-competitive and have harmed home sellers in the form of higher commissions, even though the cooperating commission is the subject of negotiation and the amount offered can be any amount except zero. So of course they're saying this is anti-competitive. You have to offer a commission. It can be 1 cent, but it can't be zero. But it can be negotiated. But in general, there is no standard. First of all, we're not allowed to say there's a standard commission in this area, but there are normal rates in certain areas that you would pay or be expected to pay from a brokerage. So of course, the sellers are saying, well, this is anti-competitive and this shouldn't be, and why are we paying the buyer's commission or the buyer agent's commission? And of course, they have a point, but we're going to see what happens through the courts. Anyway, they go on further to say here. The allegation is that these rules, together with actions by the corporate defendants to implement and enforce those rules, amount to a conspiracy to fix and control buyer brokerage commissions and insulate them from competition contrary to the Competition Act. So this is big news, a conspiracy to control and fix brokerage or buyer brokerage compensation or commissions. And of course, they were successful in the States with a similar lawsuit. And now it's happening in Canada, and it will change the landscape of real estate. And I'll get into that in a second, but I want to show you one thing here. So when we look at a listing on our system, on the internal system, we can see how much commission. And here you have it. Buyer agency compensation remarks, 2% plus HST. And this is normal. You'll see compensation on there or commission and how much the buyer agent's getting paid. So what happens in the States now is that's not going to be allowed on MLS. You're not going to be allowed to post that. You can negotiate separately, but the buyer agents won't know what they are. So what does this mean for agents? Well, for agents, this is most likely going to mean less commission, less income, and we may end up like Europe where there isn't really any buyer agents. There's only the listing agents. So the buyers represent themselves and they go and, just like a car dealership, you don't have a buyer agent working with you when you're buying a car. Sometimes you might have someone experienced that knows that, but you're on your own. And this is what happens in Europe, and this is what's going to happen in the States. How will that model play out? Will we see these buyer brokerages adapt? I don't know. It's going to be very interesting, and it is shaking up the industry in a huge way right now. And what will it mean for buyers? Well, the buyers do decide to use a cooperating or a buyer brokerage. Well, they may be on the hook for the fees on closing. You may be paying $10,000 or $15,000 more in closing costs because the commission isn't covered by the seller. Now, the seller can still offer commission when these new rules come in the States, right? It's not happening in Canada yet. But again, we're going down that path. And just like the Competition Bureau, when they opened up the MLS for private listings and whatnot, it happened in the States first, and then it came to Canada. So these things follow each other, just like interest rates. Like we follow the States. So yeah, you may have to end up paying depending if you sign a certain contract that says you're responsible. And we already have these contracts, but usually the seller always pays. But if there's a shortage, you're responsible in a lot of the contracts that these agents make even today. So will you be willing to pay a buyer brokerage for their time, $10,000, $15,000, whatever the cost may be? Or will you be paying a fee for some other service? Maybe it's just a consultation with a buyer brokerage. Again, they're making less money. They're not making their full commission. They're doing consultation services. So I see there being a lot more self-representation if this does come into effect in Canada and the rules have to be changed, but we'll wait and see. Let me know what you think in the comments. Do you need a buyer's agent? Would you be fine just doing this by yourself or contracting one in when you need them for certain things, maybe an opinion of value on the home when you're buying it instead of the whole showing process and the traditional methods that we use now? I'd like to hear what you have to say in the comments. So yeah, let me know what you think. Now we're going to move on to the national statistics for February. They just got released yesterday. I was waiting for them. They didn't come out last week, but here they are. And let's go through the CREA press release on this. So, the national statistics: Canadian home prices see sudden ends to declines in advance of spring market. Now, if you've watched this channel weekly, you know that we've seen price increases in January in many places and, of course, February. But they're talking about the home price index or the aggregate composite number from the benchmark price. That has been declining for months now, and it finally just came to a sudden end in February. And February it's not unusual to see these jumps in prices, but I use average price, and a lot of people don't like average price because it fluctuates, but I like it because it's a true representation of what's happening now. So yeah, not a big fan of the benchmark pricing because it's a lagging kind of statistic and it's not current. I prefer the average for that reason. So first off, here we have the monthly home sales, the number of home sales across the country, seasonally adjusted. And you can see in February, it actually took a dip over the previous month, January there. And of course, still well below the 10-year moving average. Here is the overall residential sales activity in Canada compared to the other quarters for February. So there's January and February 2024 at the end there. Again, nothing special. Sales are still relatively low across the country compared to previous years. Next, we have the new listings. New listings are looking healthy. Of course, we are seeing that inventory slowly increase. So you can see January and February 2024, they are looking very healthy compared to the last few years. Still not at all-time highs, but they're not at lows either. And the market balance, months of inventory in the blue bars there. We're at 3.8 months of inventory now. I expect to see that increase in March, and still not where we need to be. I'd like to see it closer to 5, but we are approaching 4 and a lot better than look at 2021 and 2022 there, beginning of 2022. Pretty low months of inventory. So we're at least double that now. And of course, the red line is the sales to new listings ratio. That has dipped back down again, meaning there is that ratio is closer to 55%, which is the long-term average, which is better for buyers. When you see that red line go down, it means there's more new listings compared to sales in that ratio. And that's what we want to see. We want to see more listings compared to sales. And here's the national average price, which I've taken into my own data table here in my own chart. And we're up 3.9% month over month from January, and that's $26,000. We are up 3.5% year over year from last February, or $23,000. And we're down 16.1% nationally from the peak, or $131,000. Now, to put that into perspective here, 3.9% month over month in February, of course, that's a big jump. But looking at all the Februaries for the last 16 years, back to 2009, you can see 3.9 isn't all that special. February is the number one month for price increases month over month, always. And the average of the last 16 years is 5.9% month over month. So we're well below that normal February jump in prices. And you can look back to areas where it was lower. It's 2018, 2019. Of course, interest rates did go up in 2018. And of course, look what happened in 2009 and 2010 after the great financial crisis. We were still recovering. Of course, the February month over month price changes or price increases were a lot lower back then too. So yeah, 3.9, although it seems like a big number, relatively speaking, it's well below the normal range for February increases. And lastly, this chart here, this is one of my favorite charts. This shows you inflation adjusted average home prices versus average incomes. And of course, these are adjusted for CPI. So if when they're adjusted, I should say, for CPI, we went from around 287,000 back in January 2008, and I think it's about 416 to 420 something now. So, inflation adjusted, the average house price is around $420,000. Now look at the green line, which are the wages. Now these aren't household wages. I couldn't get that data. These are just the average income per person in Canada. And of course, adjusted for inflation, we're actually making less now than we were back in 2008 and 2009. It's almost 10% less adjusted for inflation that we're making now. Now, this data only was available up until 2021, but of course, we know we've had wage increases, but we've also had a lot of inflation lately. So I'm guessing this number hasn't changed much in 2022 and 2023. So there you have it. Prices, house prices go up and wages have gone down as expected. This is not unknown to us, but seeing the numbers, the raw data here just confirms you're making less and everything else costs more. And this is why we call it the inflation tax. The government taxes you through inflation to pay off their debts and so they can spend more money. And this is proof that it actually has happened when you compare real estate prices to incomes. Anyway, that's it for this week. As always, let me know what you think in the comments. And until next week, I'll see you then.